Welcome to The Explainer. Today, we're taking a massive global dataset and zooming all the way down to the balance sheet of a single company to see what's actually going on. We're looking at how money is moving around the globe in real time, and more importantly, how those massive infrastructure bets eventually collide with the everyday realities of consumer demand. So how exactly are geopolitical tensions and supply chain disruptions rewiring the global economy? Let's dive right into this massive question. We constantly hear about supply chains moving and adapting, right? But what does that actually look like on a spreadsheet? And how does that macro-level boom contrast with the early 2026 realities of a specialized semiconductor foundry operating right smack in the middle of this shift? To figure this out, we've got a four-part roadmap today. First, the ASEAN supply chain boom. Second, EV and semiconductor ecosystems. Third, we'll look at a case study on ex-fab foundries, and finally, the 2026 market outlook. Let's get right into it. Starting off with Section 1, the ASEAN supply chain boom and this massive capital shift we're seeing. The sheer explosion in capital reallocation here is honestly staggering. Just look at the jump. Semiconductor greenfield investments leaped from $2 billion between 2015 and 2018 all the way up to $12 billion between 2021 and 2024. That is massive. Meanwhile, the automotive sector doubled from $3 billion to $6 billion over that same period. We aren't just talking about a gradual, slow-moving trend here. This is a rapid, fundamental rewiring of where the world builds its absolute most critical technologies. So what's driving this sudden rush? Well, reports show manufacturers from China and global multinationals are actively diversifying their supply chains into Southeast Asia. Why? Mainly to mitigate risks from geopolitical friction and to dodge the rising production costs in their traditional manufacturing hubs. It's really all about building resilience. The pandemic taught the world a pretty harsh lesson about putting all your manufacturing eggs in one basket, and this historic flow of capital is basically the direct corporate response to that. Moving on to Section 2, EV and semiconductor ecosystems, and how they're building the future. The real standout trend driving all this capital is foreign direct investment related specifically to electric vehicles and semiconductors. Now, these aren't just isolated one-off factories being built. They are entire interconnected ecosystems being built from scratch. We're looking at a 21% surge in the number of automotive projects going into 2024. This goes way beyond just car assembly. We're talking about everything from upstream critical mineral mining to battery production and charging infrastructure. It's creating these massive new manufacturing hubs, primarily in places like Indonesia, Malaysia, and Thailand, with Vietnam and the Philippines rapidly catching up. And what's crucial to take away from this is that this investment isn't just random dart throwing at a map. It is a highly structured hierarchy. First, the lead firms. Think of your massive global auto brands. They establish a presence. Their arrival acts like a huge gravitational pull. They drag anchor suppliers into the region who are heavily incentivized to diversify their networks. And then, finally, lower-tier and third-party component makers co-locate nearby just to slash logistics and transaction costs. It creates this incredibly vibrant, self-reinforcing ecosystem. We can actually see this clustering in action with some major big-ticket investments. Global heavyweights are putting down billions for long-term infrastructure. For example, BMW is pouring $1.6 billion into a high-voltage battery plant in Thailand. BYD committed a cool $1 billion for an EV plant in Indonesia. And over in semiconductors, giants like Micron are expanding their assembly and test facilities in Malaysia. Make no mistake, the macro world is betting heavily on the future of hardware in ASEAN. Which brings us to Section 3. Let's zoom in for a micro view with a case study on ex-fab foundries. To really grasp the micro reality on the ground, meet ex-fab. They are what's known as a specialty foundry. Now, that means they don't necessarily design the end consumer products you buy at the store. Instead, they manufacture the exact, highly complex microsystems, analog chips, and silicon carbide components that are absolutely required by the booming automotive, medical, and industrial sectors we were just talking about. If the whole EV boom is the modern gold rush, ex-fab is the company manufacturing the high-tech shovels. As a publicly traded company on the Euronext Paris exchange, ex-fab's financial reporting gives us a remarkably transparent look at how these massive global hardware trends actually impact a midstream supplier. They've got a significant global manufacturing footprint, including a major fab in Sarawak, Malaysia. That places them right dead center in the heart of that ASEAN supply chain network we mapped out a minute ago. Finally, Section 4, the 2026 Market Outlook, where we compare infrastructure against actual demand. All right, time for the reality check. Let's take a look at XFAB's recently released Q1 2026 earnings. This is where we see that fascinating friction between those long-term, multi-billion-dollar macro bets and the short-term, day-to-day reality of a specialized manufacturer. The crucial number is right here. XFAB's Q1 2026 revenue came in at $195.6 million. Now, while that actually beat their own internal guidance, it still represented a 4% decline year over year. They did manage to maintain a solid EBITDA margin of 17.5%, which is great, but it begs the question, why the revenue dip if the broader automotive and semiconductor sectors are seeing billions in fresh global investment?
Well, if we look just beneath that top-line number, we see a tale of two trends, a real internal push and pull. On one hand, their core markets actually grew by 2%, and they're seeing incredibly strong, fast-paced traction in cutting-edge microsystems and wide bandgap tech. But on the flip side, that growth is being temporarily weighed down by short-term softness in the global automotive market. Basically, consumer demand for cars right now is just a bit sluggish, and visibility for the immediate future is pretty limited. This whole dynamic is captured perfectly by their management team. In their earnings release, they stated, although the automotive market remains soft with limited visibility in the short term, we anticipate a steady recovery in the second half of 2026. See, XFAB knows the infrastructure is there. The capital has already been deployed by the major players. Right now, they're simply waiting for the consumer cycle to sync back up with all this new manufacturing capacity. Which leaves us with a genuinely fascinating dynamic to watch as the rest of the year unfolds. The macro world has already voted with its wallet, right? They're building the sprawling, resilient foundation for an EV and semiconductor revolution across Southeast Asia. But how long until the micro realities, the quarterly earnings, the actual consumer purchases, the day-to-day chip orders catch up completely? It's the ultimate story of supply preparing for a future demand that is still just over the horizon. Thanks for joining me on this explainer, and I'll catch you next time as we keep making sense of the data shaping our world.